Today we're going to have a session with Matteo from Deal Room, focused on the impact startup landscape. What are the trends, what is happening, and what are the developments we see. So there'll be a bit of like, some slides to kind of explain the context, the market, and also the ability you'll have a discussion and you can ask questions. So if you have questions, just put them in the chat. And then later we can also have just a discussion, with our microphones on. And also, as Andrea said, if you can have your camera on, that's nice as well for the engagements. So yeah, I myself, I work at Solonis, a software company, as a sustainability lead for their solution engineering department. And as Andrea said, I'm volunteering at Net Impact Amsterdam and really happy to welcome you here today. So Matteo, maybe you can introduce yourself a bit more, what you do in Deal Room, and then kick off the presentation.
Perfect. Yeah, hello everyone. I'm Matteo, and I work for Deal Room, which is like a global data platform based in Amsterdam, and we cover, startups globally. But since we are European, Europe is a bit our special focus and interest. And today I wanted to explore with you the key trends of the startup impact landscape, again with a specific eye on Europe. So I think if everyone is ready, I will start. And I have here some slides, and I wanted to, okay, sorry, 1 second. And I wanted to start with a quote from Shama Palihapitiya, who was like an executive at Facebook in the very beginning. And he said that the world's first trillionaire will be made in climate change. And I wanted to start with this quote because, well, in the last decade, there was this impression that, investing into impact startups did bring a lot of positive change for the world, but not necessarily a lot of, financial returns. And now I think we're in a very, very different landscape. So starting with, the key trends in venture capital investment, which are the investment towards startups that are, fast growing companies or tech-enabled companies, we can see that, well, if you start from 2010, this investment grew significantly to over 1.6 billion in 2015. But actually, if we fast forward this to today, we can really see that the level of investment skyrocketed, reaching over 7.4 billion in 2020, which was the all-time high. And here we are just speaking about European impact startups. And globally, this data is even much higher. And indeed, here on the right, I outline, the major investment rounds, the biggest one for European companies. And we have like a lot of companies such as Northvolt, Arrival, Octopus, and Lilium that are working on what we call climate tech. So companies that are directly or indirectly reducing the amount of CO2 and greenhouse gases in the atmosphere. And actually, many of these companies are known as unicorns, which are companies that are valued more than $1 billion. And indeed, we can see that, well, the European landscape for impact startup is doing quite well. And there are very, very major and relevant companies nowadays. And
maybe to, ask a quick question, but what is an impact startup? Like, how is that understood or defined in the market?
Yeah, I'm going to explain this also like a little bit later. And I think a good introduction is to ask ourselves, are like impact startup very different or a special kind of startups compared to traditional tech? And for example, here I outline some of kind of the emerging European impact companies. And indeed, these are just some examples and there are many, many more. And if in the startup space, we can kind of segment companies based on their growth stage, this is also something that we can do for impact companies. And so seed is kind of the very beginning when a company has around 1 million funding or more. And then after that, when they receive more and more investment, there are other later funding rounds, such as Series A, B, and C. And Series A is generally between 4 and 50 millions. And so these are examples of impact companies that you are also going to see on our database. And these are impact companies because essentially, what they do, their business goal, the reason why many of these companies here exist is to bring some positive change in very different domains. Some, for example, the Cheeky Panda is a B2C company selling eco-friendly toilet paper to consumers. Others, such as Overstory, is a B2B company using AI for forest monitoring. And so we can first notice that impact startups, well, they're not all the same, and they really vary based on what they do, the funding that they have, where they are based, and their business model. And talking about business model, I wanted to introduce to you, okay, sorry, 1 second. Whoops. I wanted to introduce to you kind of this segmentation. And essentially, again, impact startups, they're not all the same. And we can try to classify them, for example, based on 2 metrics, product and market fit risk and R&D risk. So the risk of, for example, not developing a product. So again, what is an impact startup? Like there are companies such as Tokamak Energy that are developing and try to develop fusion energy. And indeed, this is something that has a lot of R&D risk and also product and market fit. Others are companies such as the Modern Milkman that is delivering milk using sustainable and recycled packaging, or Ticker, which is an app that allows you to invest in sustainable stocks. And for this company, well, there is not like a comparable R&D risk. And in the kind of traditional tech market, there are many companies that are doing the similar thing, but without the sustainability part. And so, for example, you can compare companies such as Ticker to Robinhood. And whereas Robinhood, that is an app that allows you to invest into stocks of whichever kind, Ticker makes a selection of sustainable stocks and ETFs. And in this way, for example, we can kind of differentiate company. So what matters is, well, indeed, the intent of the founder. So if they founded the company to do something positive in different domains, but also, what are the kind of consequences, which is the material impact that the company is creating. But indeed, things are quite blurred. And okay, sorry. Yeah. And if we kind of move on to classify startups based on sustainability, well, there are many questions that we need to answer. And this is something, that we also face when we are labeling companies in our database. So as I said, there are companies that, they were founded to do something positive in a kind of a simplified way, such as Ecosia, that is planting trees, Svasti Microfinance, that is supporting women in India, and Mosameat, which is developing a cell-based meat. And these companies, they have a positive intent. This is why the founders decided to launch these kind of businesses, but also they have like a very positive material effect, such as Ecosia, they planted like over 120 million trees since they started. For others, such as Steer Mobility, Swappy, and Transfer Galaxy, these are companies that didn't start with impact. However, as kind of a side effect, they created some positive material effect in society or in communities. And so, for example, Steer Mobility indirectly is reducing the amount of CO2 in cities. And Swappy, is kind of supporting indirectly circular economy. And so this is a distinction that we make, and that we also try to replicate on our database to offer more granularity. And for other companies, well, it's complicated. So for example, Flow, Elf, and Nicola, and Flixbus. So it's a bit hard sometimes to judge if these companies are impact companies or if they have been impact companies and they're not anymore. So for example, Flow Elf, it's a period tracking app that is using AI. And it really started with, like an intent of improve women's health. So they really had like a femtech focus. However, there was a scandal recently by which Flow Elf did not comply effectively with the privacy policy that they kind of define with their users, and actually essentially they lied to their customers by exchanging third-party data with providers such as Google and Facebook. And so in this case, well, it's a bit complicated, you know. Companies are not static, they evolve. And also the metrics that we can use to judge them, they really differ. If a company, you know, in a very seed stage, you know, we don't know a lot about them. Maybe they're a deep tech company. There is not even a product on the market yet. For others, especially the one at a later stage, there are many more metrics that we can use to judge them. Do you have any question on this, or maybe Michael as well?
I think there's a great question in the chat about how do VC investors value the intangible assets that these companies have? So like the brand value, for example. As you know, this can be a really big part of the overall perception and the willingness to trust those companies. Like, do you see anything about that in your let's say in your analysis and your market trends?
Yeah, it really differs. And I'm going to touch on later about venture capital investors and, you know, how they kind of approach the market. But essentially, I would say that, well, first, it differs. Not all the VCs are the same. Not all kind of the VCs have the same intent. There are some venture capital funds that are kind of self-labeled impact funds, but they just want to invest into impact companies. Others, such as, let's say, more traditional and mainstream VC firms, they end up investing in a lot of impact company nowadays because they're changing their strategy. But, you know, this doesn't necessarily make them, you know, an impact VC. And well, there are many things that investors consider. Some, you know, really try to pay attention to the diversity of the founders to really improve diversity and inclusion, whereas for others, it's just the product that matters. But my impression is, yeah, indeed, there are like a lot of intangible assets that are now being valued. And also there is kind of this idea of a lifetime customer by which, you know, a company that is doing very well on diversity and environmental issues, you know, they might do better in the future as well compared to competitors.
Yeah. I'm also curious. So, you know, many larger companies start measuring their environmental, social, and governance framework, so ESG. But especially for startups, I think it's a lot more difficult and less standardized. And VCs have varying approaches for that. So, what do you see in the way startups report their impact and their positive contribution? Like, how do they typically do this?
Yeah, I'm going to have some slides on this later. This is something that is just starting. So it's something that is not standardized across the market. And if there are kind of new developments in the public equity space, let's say here that these companies are generally private, is something that is just starting to develop. So there is not something standardized. Companies, and many of them are startups that are offering services to businesses, such as other startups, to measure their impact. And this could be, you know, measuring the CO2 emission, the diversity of the team, the diversity of the executives. But it's something that is starting, and well, sometimes it's not even working too well. And I will touch now a bit more about investors and also the frameworks that some investors are trying to define and use.
Okay. Maybe one more question. I don't know, maybe you address this later as well, but so you have some examples here. And what's really interesting for me is, you know, if you want to realize large scale change, you have to make these impact business models more competitive than the existing, you know, non-impact focused organizations. Like, do you see ways in which they manage to do this, these impact startups? Like maybe, you know, they're getting a competitive advantage through their impact brand or their, you know, business model, which gives them advantages.
Yeah, I think here there is, the big issue also of greenwashing, and this is indeed like something that is also visible in the startup space. I mentioned here an example of companies also such as Nicola, for example. They're doing like, or trying to develop, a nitrogen-based truck, but actually, it turned out that they made a lot of false claims and statements. And indeed, if we will have like a nitrogen-based truck, this will change transportation for sure. And this is what Nicola is trying to achieve. And Nicola is not a small company. Is like a unicorn, a company that is present on the public market as well. So I think, yes, if a company is really green and sustainable, they will have a competitive advantage. But they need to be kind of serious about it and not to fake it. And also for some companies, it takes years, literally, before they have like a product. And a lot of the companies that are going to make like a lot of change are deep tech companies that require a lot of like upfront investment. They are very risky for R&D. And so it takes time. But if they succeed, and in a way Tesla is an example, they can really change how we think about transportation and energy storage as well.
So yeah, I think that's a really good point. The authenticity of the impact a company has is pretty tricky to define. And so as I understand it, you're saying that there's no scalable and reliable way to differentiate a real impact from companies that are maybe pretending or exaggerating their impact through marketing or greenwashing.
Yeah, I think is something work in progress, and it depends kind of the stage of the companies that you're trying to assess. So for newly founded companies, I think intent is fine. If if they say, this is our business model, this is the type of product that we're trying to develop, I think we should trust them. Whereas for others that already have a product, that maybe already have corporate collaboration, well, the level of assessment is a bit different. And for others that are now in the public market, yeah, then there is much more information available to kind of assess them. However, what we are also trying to give here in Deal Room is something useful for investors. In the end, every investor will have their own framework, ideas, and preferences. And they will actually be the ones able to define if a company is sustainable for them or not. However, we want to give some good guidelines and also to present the nuances that we see in the market.
Yeah, so at Deal Room, you also want to try give the information to differentiate between real impact and potentially greenwashing.
Yes, exactly. And this is the general aim of our platform, to offer data transparency to users, to investors, to corporates and governments as well.
Okay. Yeah, thanks for sharing. And maybe you can discuss this more in depth later, but I'm also curious how you as Deal Room try and make this distinction then between authentic impact and let's say more inauthentic PR focused approaches.
Yeah, for sure. And yeah, something else that of course I wanted to mention, and I think this is something that you see quite often in the startup space, are these kind of maps that we also do. And I did this one about hydrogen. So this is also a way to try to classify, impact companies based on what they do and the subcategories in which they operate in. So in the end, we don't think that impact startups are a special breed of startup. Impact startups are just different, and there are like different type of impact companies. And there are different ways to segment them as we can try to segment, other markets as well. And since we spoke about it, I think, if we think about this landscape, this ecosystem about startups, investors, and governments is, well, investors are very important because in the end, they're the one that they put the money, they decide which company they want to support and which one not. And so here I wanted to introduce, a bit of discussion and to kind of give a quick overview about, who the investors are. And I wanted to start with a quote from Anna Weiner, who wrote this memoir called Uncanny Valley about her work experience in the Silicon Valley in very big companies. And in a passage of her book, she writes, "The men whom the CEO seemed to admire were the same men whom all the other men in the ecosystem admired: entrepreneurs, investors, one another." And So if we focus on who the decision makers are, for example, segmenting them by gender in venture capital firms, well, we find out that most of them are actually men, significantly more compared to women. And well, this is quite an impressive statistic, and it really defines, the landscape that we are looking at. And in a VC firm, essentially in the investment team, that is the one that is making decision about which company to support and which one not, there are generally three types of roles: partners, that are the decision makers; associate, that are the people that kind of contact the companies; and junior, and these are generally the analysts. And so here we can see two big trends. Well, one, that the more senior you are, the more male you tend to be, and the more junior, these are positions in which women are a bit better represented, even though equality is quite far away. And all of these is, well, quite important to understand that if we are speaking about impact, if we are speaking about diversity, if we are speaking about sustainability, it's also important to focus on who the decision makers are. Because, well, these are the people that invest, as I said, and also define the frameworks to approach sustainability. So we can conclude quite easily that tech is a diversity problem. And this is something that we need to explore a bit further. So before I outline some statistics based on gender, but ideally we would also like to have other data points to offer a better perspective. And so this is why we partner with VCs such as Atomico, Unconventional Ventures, and so on, to encourage entrepreneurs and also investors to claim their profile on our platform and report their ethnicity. And then we are going to use this data in an aggregate way, so is quite safe, to offer an even more detailed perspective on the ecosystem. And so this is like an initiative that we just started. But also these represent, so for example, if you see here, some are kind of new funds, such as Unconventional, backed is also a kind of small fund, but others, such as Atomico, are very, big and prestigious VC firm. And so there is kind of a shift that we can see in the investor space. And basically what we are seeing is that there is an increased awareness about the impact that these investments have on climate and social justice. And investors themselves are realizing that ESG, as Michael mentioned before, can help them in advance their business goals as well. So here, I just outlined some initiatives. I'm going to share the presentation deck if you want to know more. But basically, what I wanted to show is that recently, especially in the last 2 years, we are noting a shift. So indeed, the investor space is much more men-dominated. However, there are some initiatives for change, for measurement, but also for supporting, different type of candidates in breaking into VCs. And something else that I wanted to touch upon is that, sustainability in a way is something new to the space. So the measurement is something that is still in development. And I think there is a nice example here of many VCs working with Leaders for Climate Action, which is a non-profit, to develop what they call a sustainability clause in term sheets. So in venture capital, term sheets are basically a non-binding legal agreement between the entrepreneurs and the investors, in which they define how much money would be invested, the percentage of equity that investors will take into a company. And now there is demand also for adding something about sustainability, and this is referring to the sustainability commitments that a company should take about their CO2 emission, diversity policies, and transparency in general. And so answering to you, Michael, and to the question in the chat, well, this is something new. It's something that is really emerging in these years and months, and that we have not seen before. So going forward, I suppose that, yeah, there will be more standards, there will be more data transparency about, the impact of companies, but it's something really work in progress. However, there is now this clear intent about many investors. So this is quite something new. And then I just wanted to finish with, a list of initiatives that are starting like now and then in the last months about, helping and training a new generation of investors coming from diverse backgrounds. And so we have examples such as Future VC, which is an internship program organized by Diversity VC to help, like candidates from diverse background to work and get an internship at prestigious firms, as well as fellowships such as the Newton program and Included VC to help, candidates getting the training and education that they need to break into VC.
Okay, thank you. So you mentioned that these are non-binding agreements they have with their startups from the VC side. And Andrea, you have a question about that. Would you like to maybe read it out yourself?
Sure. I don't know if I have a question specifically.
Startups responding and shifting their approach to the demands.
Yeah. This question was actually in regards to, okay, you have a lot of different capital providers. Each of them tend to have their own impact framework or way of measuring in their own portfolio, etc. So how do these startups sort of manage that? Because I can imagine that many of the good ones are also very visionary in their own right. So they want to, apply their way of managing for impact, but yet they have to respond to the demands of these capital providers. So curious how you see them balancing that.
Yeah. Well, first of all, I want to stress that kind of this demand is something quite new. And not all of the investors are demanding this. So first of all, is something really new. And basically also the reason why, investors demand this is because they are pressured by LPs, which are, the entities that give money to VC firms to invest into companies. And so here there is kind of a cycle. And well, I think it's really dependent on, who the investors are for your company. And I think in general, my impression is that startups, they tend to comply with what, investors ask them. And there is, of course, a bit of, discussion and mediation, but it is really something new. And so like the frameworks and these initiatives that I outlined before are things that were announced, in the last months. So it will still take time to have, many case studies to have a look at and to have an idea about this. And others, I also just wanted to add, some companies for their own mission, for example, Ecosia is very good at, disclosing, their finance, how many trees they plant, what they do with their money, and so on and so forth. So I think, of course, there are always some kind of, special cases that are very, very transparent. And this is also due to the fact that some companies also adopt kind of a different type of structure. So many are structured as social enterprises, for example, and others also as a non-profit.
Okay. Also, for the rest of the listeners, now, if there are any topics or questions you would like to have addressed, put them in the chat, and you can also tell them verbally. So Femke Marcus, I see you have a question about diversity. Would you like to ask it directly, verbally?
Unmute. Yes. Hi, Matteo. I think actually you were also participating in the webinar that we gave. At least I recognize you. Yes, and you were asking a lot of questions. So no, very interesting. And what actually we are doing a lot of diversity work. We investigated for the companies during our ESG assessments. And one question I had is, have you also investigated how do women look, how they perceive actually the fact that there's less women on the top, then do they also want to be on the top? Because that is something that I sometimes notice, is that yes, of course, this is the case, but sometimes the women not necessarily want to be a partner of the VC capital because it's not necessarily something that they see as fits their strength and their role.
Yeah. Well, I have to say that like the statistics that I provided, and these are, kind of the numeric analysis that we do. So here I'm speaking about something that I didn't investigate properly, but my impression is that in an environment in which is essentially part of the patriarchy, I would say, and is also very racialized as well, the type of investors, and I think here the quote from Anna Wiener is very good. We look up to, men, we look up to certain kind of white people, to rich people. And so I think here there is kind of a vicious cycle by which we don't have, at least in some spaces in finance, a lot of role models that a new generation can aspire to. So I think there is this effect indeed. However, I think the situation is also, well, quite different. Like I'm in touch with a lot of these young investors and entrepreneurs, and I really see a lot of, emerging, candidates in this space more and more. But I think it's just a matter of time to see these really being in the center of the discussion.
Yeah, I think your point about role model is very important. Yeah, thank you.
There's a question I have, which, so I was reading an opinion piece from a VC partner about how, all the leadership and the things that led the way and how startups work was really driven from out Silicon Valley in the last couple of decades. And his prediction was that the climate, startups and really the fundamental change will be driven by European startups, that this is the real opportunity for this continent to take the lead and really, define the playbook for how this is done in the coming decade. What is your view on a statement like this?
This is a big debate. So I will say that indeed in Europe there are a lot of impact companies, and this is something that we also see in our database and analysis. And many of them, like the one that I outlined in the beginning, are also quite big and relevant. So indeed, we can conclude that in Europe there is the whole pipeline, a lot of seed stage, a lot of Series A, and some unicorns as well. But however, there are also very relevant companies burn out from the US and Silicon Valley. And I think, the trend that we are seeing now is that, the kind of global startup ecosystem is becoming a bit more decentralized. So, there are like multi-billion-dollar companies emerging from, Romania and other, tier 2 ecosystem. And so also for the climate space, this is something that we are seeing. However, we should not kind of ignore that a lot of very relevant companies are coming from the US still. This is also true for the climate space and China too. Because, here I show you some charts about Europe, but if we will want to see the amount that is invested into American climate tech companies, these amounts are even higher.
So many startups, but not enough capital.
Yeah, I think, it's a matter of attracting also really global investment. And I think sometimes this is a bit a challenge for Europe. So especially at the later stage, once, there are bigger rounds, more capital is needed, sometimes Europe is lagging a bit behind. And it's true, there are a lot of fantastic impact companies in Europe, but based on some metrics, the ecosystem, is also in development.
Okay. And so, Andrea, I see you have another question about the top-down versus bottom-up approach. Would you like to expand on that a bit?
Yeah, sure. So in these, as you call them, like the self-proclaimed impact VC funds, do you see them working from a top-down, whether it be sector, region, impact theme, etc., or really a bottom-up approach that sort of is willing to take whatever they think is a good opportunity?
Yeah, for basically, also self-labeled impact VCs were very different. Some, for example, are just focused on investing into diverse founders coming from not traditional backgrounds. Other, they just invest into climate tech companies. And also, I think it's important to stress, investors don't invest alone necessarily, but they also co-invest with others. So what we are seeing now is that there are a lot of like traditional VCs that are co-investing with impact VCs. And so if you look at the amount of money, let's say that, impact VCs are very important, but the big chunk of capital and the reason why also all these investments exploded is because there is a lot more traditional, let's say, money coming into the space. And so to answer to your question, it really depends. I think they are after, the unicorns, so the 1 billion companies, but also they are not stopping at profit. They also want to invest in companies which, can really make a change in society and for the planet as well.
Okay. So I don't want to let this session go on too long because, it's like a really beautiful day and give people the chance to go outside. But I have a couple last questions. And if anyone in the group has any more questions, we can answer them as well. But one of the ones I specifically want to ask is about the growth of impact startups. So 2 related questions, really. The first one is, where does the growth of these impact startups begin? Is it with the customers, either businesses or consumers? Is it with the capital that's looking for impact-focused initiatives, or is it with the entrepreneurs who, are the ones with the ideas and the business models? Where do you see, let's say, the biggest leverage point to, and how can we let this grow and gather speed towards the coming decade?
Yeah, I think like ideally a startup will need all these 3, but I think, touching also back on the debate, Europe versus the US, I think a lot of, successful impact companies in the States, for example, they've been successful because they've been very good at commercialization, finding customers internationally, really have a product which was very appealing. And in Europe, I showed you before, we have like incredible talent, a lot of incredible deep tech companies, but sometimes there is a bit of struggle in these, finding customers and commercializing their product well. And so I think this is indeed like an ingredient for success, and is really differentiating, companies becoming very big or the ones that are staying small. And now also, like there is really a big change. So there is a lot of capital. There is a lot of capital coming into startups globally and in Europe as well. And there is a lot of capital going to impact companies. However, not all the startups are the same. And the good ones, I think, are the ones that, are really able at commercializing their product well. And also that the management team, the founders are also very good entrepreneurs. And this means, for example, having very relevant experience in the field, being technical, but also being good, with sales and speaking to customers.
What kind of average, like are founders usually on the younger side or on the older side then of the spectrum of these impact companies?
Yeah, this is something that we are also starting to look into, and it varies. So some are founders, that have previous experience, for example, in energy companies, and that they're starting their own startups. Other are, very young and ambitious people. So it really varies. But in general, I think, experience really matters. And there is also a kind of what we call a snowball effect, by which, like successful entrepreneurs, they become angel investor, so they, into startups as well, and this is something quite relevant. And so the startup ecosystem is quite big, but is a very well connected ecosystem, and is based on knowing each other and networking. And this is also why I think we have these diversity issues, because it's a very small and closed ecosystem to some extent. And there are, I'm sure, you know, like talent is equally distributed, like a lot of talented people and entrepreneurs that, you know, struggle to get access to capital. And I think this is also, it should not be ignored.
Okay. So I have one final question before we can start rounding it off, you know, unless there's maybe one last question from the crowd as well. But so I've seen that there's a lot of enthusiasm and interest from people who want to work for an impact company. You know, they want to have that extra purpose or mission in the work they do, but it's not easy to transition from like a maybe normal corporate or other company to one that's focused on these sustainability topics. Is there anything you see that helps people be successful in entering this field and let's say thriving in it? Are there any tips you can give?
Yeah, I would say, well, first of all, like really watch all the episodes of
Sorry for disturbing Matthias and Michael. Thanks a lot for also giving the presentation. And we interrupt because there's the one key data that's quite close to our heart that we would like to pick your brain on. Is on funding to female-led and also female founders. So quick introduction from our side. So it's Bow Capital. So we are a Scandinavian-based impact venture capital fund, and we support impact on female entrepreneurs. We have seen different data points coming from Crunchbase as well as other database that have shown different statistics in terms of percentage on fundings to female-led entrepreneurs. And we want to pick your brain on, given that you have a quite in-depth analysis and also data on this.
Yeah, I was not able to include everything in the slides, but yeah, there is like a very big difference between the funding that, you know, female-led companies receive compared to the ones with male entrepreneurs. We have not done an analysis yet on just impact companies, but for what I've seen, and you can see also on the State of European Tech, for example, that we worked on, that the ratio is extremely uneven. Like I would say, I mean, it depends on the geography, but it's around, you know, 90 to 10. So yeah, there is really quite a big difference. And maybe just to close off, well, first of all, I invite you to check our platform that you can see here, and you can find it at impact.dealroom.co. And yeah, you can access it for free. So I invite you to check it out. There are like, yeah, thousands of startups and impact companies that you can check. And to answer you, Michael, well, I will say, well, first, you should really check all the episodes of Net Impact from Home. I think they're all very good, and there are like a lot of tips given by other people that presented. And in general, I would say, well, that you don't necessarily need to work for an impact company to make a difference. And this would be, you know, my main suggestion. And I think there is sometimes a bit of a difference between like a sustainability professional and people that, like, you know, they work for like other type of companies or the government, but still can make a lot of change. And so my suggestion would be to connect with groups such as Net Impact and others to really, you know, be inspired, and then, you know, also find what you are interested in. The sustainability space is huge, and you go from, you know, the environment to diversity to privacy and to everything between, right? Because everything is a bit intersectional as well. So I would suggest to, you know, to connect with the people that, you know, that you like, and with welcoming groups such as Net Impact.
Yeah, thank you, Matteo. So really nice presentation. I enjoyed the, you know, the one part, the ambition, you know, the first trillionaire will be coming from the climate and impact space. It's a huge growth area for the coming period. And thanks for taking us along on this journey and explaining it to us. And thanks everyone else for dialing in on your lunch break. Hopefully there's a bit of time, at least in Amsterdam, it's sunny. So at least hopefully there's a bit of time for you to catch a bit of sun still. And thanks for dialing in, and hope to see you at another Impact from Home session.
Thank you, Michael.
Thank you.
Thank you.
Thanks, everyone. Have a nice weekend.
Have a good day. Bye-bye.
Bye.